bring in some perspective from Neeraj Seth. He's, of course, joining us now to talk about all of that, what has happened. He's CIO and head of APAC Fundamental Fixed Income at BlackRock. Neeraj, great to have you with us here. Thank you for your time. From the last time we spoke, there is so much which has happened, right? So is the worst of the panic behind us, Neeraj? What is your sense? We're hearing from Bank of Japan this morning, to be expected. I mean, that the hiking program was dead on arrival in that sense. I'm not sure if we will hear something similar from from Fed officials, but from a market perspective, is the panic settling down?
Sure. So let me split this question in three parts. In terms of the markets, what's happening. Second, the comments from the BOJ, and then your point about the Fed and what to expect there. On the first one, I would argue actually the volatility is not behind us. We might see more, but the extent of panic or the correction that we had over the last literally 3 trading days, that seemed excessive. So combination of the carry trade unwind, the BOJ move, and the weaker data in the US, which shifted the narrative very quickly going into the weekend towards a recession risk. I think there was an extreme reaction from the market due to a combination of these factors. I don't think we'll see necessarily a repeat of similar kind of a correction. But given we are still in the summer month and we still have uncertainties in front of us when we think about the upcoming US election, the weakening data in the US and what the Fed does from here, I do think you have potential for the vol to maybe stay a little higher in the next few months. Second, in terms of the BOJ, I do want to clarify at least my take on the statement that BOJ will be mindful of the financial sector volatility or the stability, but it doesn't mean that they are done with hiking. Looking at where the inflation is and the path for normalization of policy, we do still expect BOJ to be patient, but hike further later part of the year or early part of next year. So I do think we are still on a normalization path, and that's not over. And I think the markets obviously interpret the comments in different ways. And lastly, on the Fed front, I do think we're moving towards an easing cycle. That's the same thing I said the last time. But I don't expect Fed to actually come out and do any immediate urgent emergency reactions on the back of the market functionality, because the market is still functioning okay in US. So I don't think that changing the path of the Fed. But yes, we'll see the easing cycle starting in September.
Neeraj, you make excellent points. I'm just wondering, in the last 20 years, we've seen that typically many central banks, especially I think the US one, they do end up dancing to the market's tunes rather than the other way around. We've seen that right from 2007-8 onwards, right? So let's see if the BOJ can really hold its ground and continue on the path that it had charted out earlier. But for what it's worth, I mean, markets right now really holding on to that hope. Where does this leave the whole unwinding of the carry trade? I mean, do you think we're halfway through, almost through? What happens from here on? Because what you're saying is that we'll continue to see the Fed cut and eventually the BOJ hike. So what happens to the carry?
So first of all, I don't think we have seen a complete unwind of the carry trade. Now, based on the data that I've seen as well as the estimates from different market participants, we probably are done maybe 50 to 60% of that unwind. Now, what happens path forward? Given the market volatility and the shift we saw over the course of last 1 week, I don't think you will see a lot of addition to the carry trade immediately. But as the currency settles down and BOJ shows a lot more patience with regards to the normalization or hiking path, you will see some buildup of the carry trade, maybe not to the same extent. And lastly, as the Fed goes on the cutting cycle on obviously where the market pricing is, and the BOJ goes up in terms of normalization with the patience that they will show, I think the dollar yen probably shows some level of stability here rather than the spike we saw with 11% move in the last month. I think a lot of that obviously was an overreaction by the market.
Okay. Hi, Neeraj. Good morning. Good to hear your thoughts. What about the Indian market as well as the RBI? I recall the last time we chatted, you said that in the coming months, you're not too optimistic about a rate cut coming in from the RBI. What are you factoring in now, given that from the Fed, we are looking at around 100 basis points? You could correct me on that point as well with regard to the RBI.
Sure. So first of all, Indian markets, medium to long term, I'm still positive. Corrections are good. I don't think that should be something that should stop people from looking at long-term investing. So the macro story is intact. I don't see anything changing there. From an RBI perspective, the Fed easing opens the window for RBI, but looking at the domestic monetary conditions as well as the inflation alongside the growth dynamics in India, I don't see the rush for RBI to cut rates. And if you in fact look at the last statement from RBI with regards to the natural rate, and they raised their expectation to 1.4 to 1.9%, which means we're not at a point where the overall monetary conditions are excessively easy. Or tight rather, sorry. So I don't think we are at a point where there's a lot of pressure for RBI to cut. But as the inflation eases further, given we are going through a decent monsoon and the rain has picked up, as you would know better than I do, over the course of last 4 to 6 weeks, and we don't get the food price inflation spikes, I think getting close to the year-end, RBI has room to start easing. But it will be a shallow cutting cycle given where the natural rate they have telegraphed and where the inflation and growth is at this point. So India, the macro story is in a very strong place despite where the rates are today.
All right, Neeraj, we'll leave it there for this morning. Appreciate you being with us this morning. So interesting times and interesting markets to track and trade. And of course, I mean, we look forward to hosting you here in our studios soon. Thanks very much for being here with us on CNBC-TV18.